But let's start with Sasol, right? Because of course this is oil and gas local, but of course it is a big chemicals operator and in a way getting bigger in that space. It came from the original initiative to try and make liquid fuels in this country from coal feedstocks. It now, of course, uses quite a lot of gas as well. Big company, established in the 1950s, one of the country's largest taxpayers, let me tell you. They put that in their annual results. It's quite important to see, but that's, of course, because the Synfuels business is so profitable. Market capitalization, 235 billion rand. Price earnings ratio 11.22, dividend yield of 3.84. I'm going to get them to put up the share chart now because it's not a very nice looking one. And JP, you can tell us what you think's going on there.
Yes, so you can see the very strong share price performance till, call it mid-2014, and that was on the back of very high oil prices before we had the US shale effect coming in and OPEC not cutting back on production, as well as a weak rand. And since then, you first had the oil price dropping sharply, which is not good for Sasol. And then in the last year, you also had the rand strengthening, also not good for Sasol. So double negative whammy for them in the last year.
Because the profitability of their Synfuels operation is set on the basis of what it would cost to import liquid fuel products. They get paid, and so if the oil price goes down, then they make less margins in what is always a profitable business, but it becomes sharply less profitable. But what about the Lake Charles thing? Tell us about that.
That is the big thing about the future.
Where is Lake Charles for the viewers at home?
It's in the US.
In Louisiana.
Southern states, Louisiana.
On
correct.
the Gulf of Mexico.
Yes, and
it
quite
looks horrible.
marshy.
If you go to Google Maps or Earth and look at that place, it looks hot and grubby.
Yes, and a bit marshy, which was the problem they had with a lot of rain and then things get stuck in the mud. So it's a huge project. At the end of the day, they're going to spend half their market cap on this project. And it's whether it's the ethylene plant or whether it's the cracker. Basically, they are diversifying Sasol internationally, but also diversifying away from Synfuels, which is the Fischer-Tropsch process of taking coal and converting it into oil, into petrol as we call it, towards more chemicals.
Because they take natural gas, which is very plentiful. There's a network of pipes there coming from the Gulf of Mexico, in other words, and then they produce chemical feedstocks in the US market, which is obviously very big. And they thought it was a good opportunity because natural gas prices were so depressed. They still are, but in a way, the opportunity, the timing could have been better.
Yes, although they do look at those spreads, and some of the spreads the cracking spreads have narrowed, but they still say that even though there have also been some cost overruns, it should be equal to their weighted cost of capital, which isn't great. You want any big project to exceed that. And remember, the project is not done yet, so there might be some further cost overruns. We hope not, which might make the return drop slightly below the weighted average cost of capital, which should make it value destructive. But at this point, it's at least value neutral in the short term. And it diversifies them away from just South Africa. They might become a big taxpayer in the US as well one day, even though they have some tax concessions for this project right now. So that's the big exciting project for Sasol.
Okay, so that's big and exciting, but in terms of whether the stock is hot or not now, you would have to take a view on the rand and a view on the oil price. So just in summary, what are your views on those two elements?
Well, at the moment, if you plug in spot oil and rand dollar exchange rates into a Sasol model, your earnings would be lower than the previous year. It wouldn't look great, and that is the concern. So with a rand closer to 12.60 and a dollar oil price where we are right now, you would not be a buyer of Sasol in the short term. But with this big project and looking further out, I would say that a lot of this negativity is already priced into the share price.
And the rand? I mean, what do you expect the rand to do? Most people think the rand has gotten a little too strong for its boots.
Yeah, I know as a South African, most of us innately think that the rand will weaken over time.
But that's not always.
And it hasn't happened over short bursts. Over the long term, because of the interest rate differential, we have high inflation. It should weaken against the US dollar. So once again, the answer in terms of the investment opportunity for Sasol is a different answer in the short term than to the long term. In the short term, a lot of headwinds, but in the long term, I'm still bullish on their positioning, the rand against the dollar, implying it will continue weakening against the dollar, and then it's not a bad proposition.
Okay, look, for this purpose of this show, we normally take like a 1 year view, although we do take positions and hold them long. So on a 1 year view, hot or not?
Oh, Paul, that's a difficult one. A 1 year view, anything can happen, but I would say, given the short-term headwinds being discounted in the share price sufficiently, in my opinion, I would say hot.
Okay, I'm going to go not hot on the same basis, but it's close. Okay.